Hi there, I'm Rose Jacobs and it's great to be with you today for Kalkine Media. Today we're going to look at how the commodity market may shine again in 2022. But before we get started, be sure you press that bell icon at the bottom of your screen for all the latest updates. Now, while the coronavirus pandemic drove commodity prices to multi-year lows in the year 2020, the market witnessed a notable comeback and rallies in 2021. From lithium to crude oil, most of the commodities delivered a terrific performance in 2021. A part of the credit goes to supply chain bottlenecks, which caused shortages worldwide, sending commodity prices soaring. Although supply remained constrained, rebounding demand amid gradual reopening of the economy further drove up prices in 21. In addition, government stimulus programs and the central bank liquidity lit a bullish fuse in the commodities asset class. Some credit also goes to the severe energy crisis encountered by Europe and China, which prompted a significant rise in prices of energy commodities last year. On that note, let's take a look at some ASX-listed stocks that investors can keep certain on their watch list. Looking at Allkem, speculations are rife that the demand for lithium will continue to increase in the coming year, prompting a further rise in lithium prices. Meanwhile, a rise in electric vehicles adoption and decarbonisation could benefit lithium prices. This could rule in favour of lithium players like Allkem, which focuses on developing lithium or potash resources in Argentina. Recently, Allkem released its December 21 quarterly report. The company informed that it shipped 38,071 metric tonne, and that was of the spodumene concentrate during the quarter at an average grade of 5.7% lithium oxide. It helped to generate revenue of $60.7 million at an average sales price of $1,595 dry metric tonne cost insurance and freight. Looking now at Santos, no doubt any prediction for the oil market seems bold at the current moment given the recent emergence of the Omicron variant. However, existing market forces are pointing towards a tight oil market in 22, with demand more likely to recover to pre-pandemic levels. The company observed record sales revenue, record annual production and record free cash flow during the December quarter. The robust base business performance placed the company to gain from higher commodity prices. And the conclusion, the year 21 saw higher demand for most of the commodities amid a recovery economy. It will be interesting to see if this strong demand will continue to strengthen this year or lose momentum. Meantime, it will be worth watching if the emergence of the new COVID-19 variants and the decarbonisation policy will disrupt the commodity market again in 2022. A potential rise in interest rates could pose challenges for gold and other precious metals due to increased competition from higher yielding investments. Moreover, balances for several commodities could become less tight in 22 in case supply conditions improve. But that's it for today's report. If you like what you've heard, then do be sure to like, comment, share and subscribe, and check out the website kalkinemedia.com. I'm Rose Jacobs. Thanks for joining me.